Good morning and welcome, Petro Radio News Hour. Joe and Jason on this Wednesday. Happy hump day out there to everybody. Our toll-free number, 800-951-0592. The website at allamericangold.com. And yeah, the debate came and the debate went. I think probably something for everybody. Harris did fine, right? Trump was Trump. I think the markets are a little nervous as to, she didn't do horrible, right? Better than what? Now, granted, the bar was low, but a whole lot better than probably Joe Biden could have done. And it's, Taylor Swift. Yeah, the Swifties out there throwing her hat in the ring for Kamala. But you'll hear all of that on other shows. But we've got so many more important things to talk about. And that's kind of weird to say that. Hey, you're talking about who's going to be the next president. And you got more important things to talk about? And the answer, unfortunately, is yes. And a lot of them. It is a very ugly start to the day for Wall Street today. We got the CPI numbers. All of you on Social Security, I'm going to update you on your cost of living adjustment number. More banking problems. Warren Buffett back at it, dumping more Bank of America stock. Ally Financial. Oh, man. Did they drop the bomb? You know what? We'll play a little clip of what's going on so you can hear it from somebody other than me and Jason. Because I don't want you to think that we're, somehow slanting this or giving you something that isn't, okay, it's not great, but it's not that bad. It was not good as to the shape of the consumers. And we had Citigroup chime in, JP Morgan chime in, Goldman Sachs chiming in, and everybody else in between. And this is going to be interesting with what's going on with the regional banks. The Federal Reserve blinks and says that the capital requirements for the banks of over $250 billion. Okay, now, for a lot of people out there, oh, God, we probably got tons of banks with over $250 billion. Less than 20. They knew that they needed 19, 18, 20% more money set aside. They settled on 9%. So the Federal Reserve, the comptroller of the currency, the FDIC, unwilling to make sure you guys are going to be protected. Listen, believe me, that is bad news for any of you out there that like to hold lots of money into the bank. And then, of course, the inflation data, very, very much what we thought it would be. It is going to get harder now. All these big numbers from the previous year falling off, but just very quickly, the headline number was up 0.2%. That was in line with expectations. The year over year up 2.5%. Also in line with expectations. However, the core was up 0.3%, which put that hotter than expected. By the way, the 51st straight month of month over month increases in the core CPI. That is a new record. So even in the 70s, we didn't have this. So that means, listen, when they talk about this, they try to act like, oh my gosh, inflation's going away. No, That just means it rose another 3.2% on the core, 2.5% on the headline number. And of course, the headline number, energy, cheaper gas, saving us for right now. But Jason, I think for Wall Street, this was a number that says, well, darn it, we probably can't do these half-point rate cuts because the core is still way over 3, and it wasn't, with cheap. I guess there's 3. I don't know what you guys do. We pay like 340, 350 a gallon here. I guess that's considered cheap gasoline, but nonetheless, at least the headline number, the lowest since February of 2021. But this is kind of making them feel like we're only going to get a quarter of a point. What is it, next week or the week after, whenever that is?
The inflation numbers going down is going to be the rest of this year, Joe, I think. And then starting next year, this inflation is not going away. What happens if you're selling stuff and nobody's buying? You'll lower your prices, right? Is that really controlling inflation, or is that the consumer is just out? And what will happen is when the consumer is out, the prices will be what the prices are. You can lower the prices until people will buy, until they stop buying. We get a market crash and some money printing going on. The inflation from 21, 22 may seem like nice inflation, depending on what the Fed's going to do and what the markets end up doing in 2025, which it looks dark, Joe. It looks very dark.
Yeah. Well, when we get back, we're going to start talking about what happened to Ally and what the banks are saying. Stay tuned. 800-951-0592, Patriot Radio News Hour, Joe and Jason on this Wednesday. And yeah, I know there was the debate yesterday, and half of the country thinks Trump's going to save them, the other half think Kamala's going to save them. That's not what's really going to happen. I wish it was. I want it to be. How's that? I want that to be the case. I do. Unfortunately, I know how to do math. I guess that's my biggest problem. If I didn't know how to do math, maybe that's why math is the hardest subject in school for most people. Maybe that's why, because they don't really want you to know how to do any math. You better get serious here. Things are changing very, very quickly. A quick look in at the markets right now. The Dow's down 600 points. It's been down over 700 points. The S&P's down 65. The Nasdaq's down 130. The 10-year note at 3.63. It's been as low as 3.6. Crude oil's up a little bit. They bashed it yesterday, but crude oil at $66. Gold, by far the best performer of the day. Right now, it's down $3. I don't know that it's going to stay down, but 25.14, pretty much where it was yesterday, actually, 25.14 on gold. Silver is, well, look at that. Boy, silver moves fast. It is now the best performer. It's up 10 cents, 28.50 on silver. And I'll just tell you now, I've been telling you for the last couple of years, get more diversified. Better get that money out of the bank. And again, you think you're safe in a money market? You're kidding yourself. In a brokerage account, kidding. If you want to do that, go ahead. It's fine. It's fine. I mean, I don't know why you would be that risky right now. But I'm giving you alternatives. Gold and silver, you got to have it. You know it. I know it. We all know it. And today, again, we're going to do another great special like we always do. But inside of that, check out our friends over at YRefi. Why? You can get a great fixed rate of return, not correlated to Wall Street, not correlated to the Federal Reserve. It didn't give two craps about today's inflation report. Doesn't care what the Fed does at the next meeting, doesn't care who the president is or isn't. And the best part, they don't play any games. You can turn your income on, you can turn it off, whatever you want, compound it. They never attack your principal. They don't do any of those things. And it's kind of really cool what they do. Check them out, investyrefy.com. That's the word invest, the letter Y, REFY.com. Or just call them. That's like the simplest thing. 888-Y-REFI-24. And as you guys know, the minimum's $50,000. So you gotta be of some means. And that's not because they want it to be. That's the SEC requiring it, by the way, just so you know that too. 888-Y-REFI-24. So what happened? What happened? Yesterday, the markets fell late in the day. Today, obviously, they're down big. And it wasn't like the CPI was something horrible. It wasn't. What happened? Well, you know what? Instead of me telling you what happened, Jason, Jack, whoever it is, let's play this clip. This is Fox yesterday talking about what happened in the marketplace yesterday and into today and what's going on with these banks.
So the session began with so much promise, right? And then there was news that, well, just really knocked the stuffing out of bank stocks. You can see financials getting hammered more than all the others. And the broad market rally, by the way, became a sea of red. Now, from what I could gather, there were no surprises from Fed Vice Chair of Supervision, Michael Barr, who urged, right, 9% capital increase instead of 19%, which had been floating around for a long time. This for banks with $250 billion in assets. So that wasn't news per se, but maybe this was it. I want to look at this for a second. Ally stock drops 15%. It's down more than that right now. They were at a conference, and the chief financial officer presenting at Barclays, he said a few things. Some of the things he said that scared the heck out of the markets. Our credit challenges have intensified. Late payments on auto loans in July and August rose by 20 basis points more than expected. We clearly are dealing with a cohort of borrowers who have been struggling with the cost of living and now are struggling with an employment picture that has worsened. The stock getting absolutely hammered on this news. In fact, it's looking like one of those dollar store stocks. You can see it's down here. A couple of days ago, it was significantly higher. So let's bring in QI Research CEO, Chief Strategist Danielle DiMartino Boots, because Danielle, none of this is news to you. You and I have had this conversation over and over again. And what I'm curious about is this market reaction. Do you think, this is smart money. Is it just that smart money living in ivory towers didn't know this stuff was happening?
I don't know about all that. By the time you get to revisions to payrolls that are north of $1 million, at some point you're like, okay, maybe I should be questioning the data no matter where I occupy, whether it's an ivory tower or the sell side. But I think what
no one's
Ally
questioning
did this morning was that...
I'm saying, look at J.P. Morgan's getting hammered. It's down almost 6%.
Well,
and
why is J.P. Morgan getting hammered? It's very rare, Charles, that a large bank stock, a big city, a big bank center stock will follow a smaller lender like Ally.
Right.
But that's exactly what we've seen, because J.P. Morgan's pointing out that not only are net interest margins going to be lower, but that expenses are going to be higher, and that is code for, Ally's talking about higher charges because of auto loan losses, and other ones, other lenders are talking about credit card losses. J.P. Morgan's going to get hit with both, and so their expenses are going to go up much higher in terms of losses on the consumer. We're expecting to see at QI Research charge-offs on autos and credit cards exceed those that we saw in 2010 at the heights, given unemployment is just now picking up. That's what made the market so scared this morning, Charles. It was that Ally actually said job losses are a problem.
Yeah, that was that last line I read. So you brought up the consumer. Yesterday, 3 o'clock, the consumer credit number comes out. I'm blown away, honestly. It was huge. It exploded. I guess, we just shop till we really drop. But how do you explain that the people are still out there spending when they don't have it?
Well, Charles, that is the American way, right? Until you're stopped from spending, because so many government officials encourage you to go spend, 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 you don't stop. But what we did hear was from yet another bank yesterday afternoon. We heard from Citi, and what Citi said was that they're seeing a shift in their credit card customer base from using their credit cards to charge on discretionary things we want to buy to essentials, to groceries, to gasoline, to the things that we absolutely must cover. That means that $10.5 billion increase in credit card charges that we saw inside that data yesterday, a lot of it's going to end up in delinquency going forward.
Right.
And that was why I think it's Citi that really started this off yesterday afternoon, followed by Ally, followed by JP Morgan.
Great point. I had not heard that, but it makes a lot of sense. So this morning, we got small business optimism.
That's good, Jason.
Absolutely.
You get the gist of what it is that they're talking about here. This is a big shift downward. So Ally talking about 20 basis points higher than what they thought it was just going to be 30 days ago. That's significant because it was bad 30 days ago, and they're like, it's even worse now. Citigroup saying there's been another shift in credit card spending, and we talked about this yesterday, and I'm glad that you can hear it for yourself from somebody else. Citigroup saying, holy smokes, all of these people that were using their credit card to take a vacation, right? They were taking, we're going out to the fancy dinner and using the credit card. We are going on, we are staying at a nice hotel, whatever, going to Disneyland, whatever it was. That ended. And they said, all of a sudden, now we're seeing it's groceries, it's gas, which, as Daniel DiMartino Booth said, very simply, this is going to end up in defaults as well. We heard from JP Morgan the other day saying charge-offs are going to be intense. So when we sit there and we're thinking about Warren Buffett, who sold Bank of America stock again, Jason, this is an interesting setup because we're talking about credit card and auto loan defaults back to the financial crisis. And the firings are just starting. I think it's going to be very obvious if you see this dramatic shift in credit cards where all of a sudden they're not buying the stuff that doesn't matter, right? There's going to be layoffs in those industries, right? The bars, the restaurants, right? We've already seen it at the stores, the non-food stores, right? We're seeing all kinds of closures and bankruptcies. This is a situation, again, it's kind of this slow-moving freight train that seems like, Jason, it's been climbing uphill, like kind of the roller coaster at the amusement park, right? You get the butterflies in your stomach and you're almost at the top and it's going to come crashing down. I think this is what the market is fearing. And today's inflation number, the fact that the Fed can't go, well, they can, but they probably won't go 50 basis points, has the Dow down 600 plus points. And you know what? I think this is just the beginning.
Well, I think she missed an opportunity in that clip. The gentleman was kind of leaning towards these guys in ivory towers. What do they know? Why didn't she say Jamie Dimon? And because he was mentioning J.P. Morgan Chase. She did a good job explaining what we talk about. But I think she missed an opportunity because he was kind of leaning into how do these guys in the ivory towers know that to sell this stuff off before all this happens? She should have came in and it's like, well, you're right. Jamie Dimon sold a whole bunch of his own bank stocks for the first time ever. And she should have said, that's the one guy that could make his company perform better in the stocks by firing employees, tightening the bootstraps. He actually could physically try to make J.P. Morgan Chase look better and perform better. No, he's selling stock. He knows something. And then all that information that she put out there would back it up. because you really have to watch big money, Joe, because they're the ones moving the markets.
Yeah, and Jamie Dimon yesterday after the bell, the worst outcome will be stagflation, a recession with higher inflation. Yep. And oh, by the way, and he was speaking at the Council of Institutional Investors, by the way, just in case you want to know. Oh, by the way, I'm not taking that off the table. And he said that he worries that inflationary forces, so what does he know? He knows something, are on the horizon. Yeah. He talked about deficits again. I keep trying to tell people they don't get it, Jason. They just don't get it. They don't understand what another $1 trillion in deficits is really going to do. And we're going to find out starting next year. The need for increased infrastructure spending at the time when the deficits are already too high. And he said everything is inflationary. Basically, in the short run, the next couple of years. So it's hard to look at it and say we're out of the woods. I don't think so. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. Tomorrow we'll get PPI and jobless claims, so stay tuned. Looking at these bank stocks, JP Morgan down, Bank of America down, Wells Fargo down, Morgan Stanley, Goldman Sachs, Citigroup down, U.S. Bank down. You get the idea. Down, and down some more. By the way, Bank of America now down almost 20% since Warren Buffett started selling. Remember, he's still got to keep telling us until he gets below that 10% number. So right now, we've got a very, unfortunately, not as unique as it used to be, but we got an opportunity. There was a client of ours that had passed away. We've gotten the death certificates. The lawyers are involved. The family members trying to decide what they are going to do. And so we are, I guess, in charge of the hard assets in this estate. We're going to put some things out there that the pricing, nobody will even come close to it. It's limited, but it's such a good opportunity, we can't pass it up. Here's the catch. You got to pay for it first. We won't have it for at least 2 to 3 weeks because that's just the process that it goes through. But it's coming, and we've got the order. We've got all the signatures that we're supposed to have. There's a process that we deal with these things. But here's what I've got. We sold a bunch of it yesterday. So
yeah, we already sold a bunch. It was so priced well that we sold a bunch of it.
We sold a bunch of it yesterday. But I have 18 1-ounce American Gold Eagles. So that's your $50 American Gold Eagle.
1986 to present.
Yep. $2,585. Right now, gold is $2,515. That's $70 over spot. That's essentially a little bit below cost. Right at cost or below, and actually a little below cost for a gold eagle before people mark it up. And a lot of people, hey, I'm going to make at least $150 on it. So really you're buying this for hundreds of dollars below. A $20 gold piece right now, I got them on sale for $2,695. I love them. But for $110 less, and you're going to get an ounce of gold, do it, right? I've only got 18 of them. That's the last of those. And then I've got 50 1/10 ounce. And I'll just say this. The 1/10 ounce, you got to buy the roll. You got to buy the whole thing. $290. Nobody's close to that. Everybody, $310, $320, $330, $14,500 for the roll of 10th-ounce American Gold Eagles. It is a steal. And then 18 American Gold Eagles. Jason, again, we've been in this sweet spot, it seems like, for the last 3 weeks. When you've been around as long as we have. Why do we get these? Well, first of all, we've been around forever. Right? We're coming up on 30 years. Secondly, we treat people the right way. You don't get ripped off like the guys that sponsor all the Fox guys and Bongino and all these other crooks out there. That doesn't happen. We don't get complaints at the Better Business Bureau. We don't get any of that stuff. The courts come to us all the time, even when they're not our customers, to say, hey, guys, will you handle this for us? You know why? Because people don't complain. They do their homework. They found, man, Patriot treated us well. It just gives you a golden opportunity here. If you're one of those people, I want the best price for an ounce of gold, and I don't care what it is. You can't even buy a gold bar for this price. $2,585 on the Gold Eagle. And again, there's 18 of them. And then somebody's going to pick up this roll of tents. $14,500. It's outrageously ridiculous. 800-951-0592. And Jason, we're sitting here watching, right, the setup here. All of a sudden, all of these financial institutions, you're Charles Payne in that clip. Why do the big banks, the mega banks, care about this little financial, Ally Financial? They're not that big. They're not, it's kind of, why is the tail wagging the dog instead of the other way around? And the answer really is simple. Because all of these banks have the same exact problem. They didn't talk about the commercial real estate problem. That hasn't gone away. Now all of a sudden, hey, let's add in credit card and auto loans, and all of a sudden, all of these financial institutions, I think we're going to see at the next earnings season, huge increases in write-downs, in write-offs. This is going to affect profitability, and I think, Jason, we're on watch now. What bank is it that's going to scare the market?
Well, and it's kind of an easy question, Joe. Why is a smaller bank like Ally important? Well, when you have big bank stocks going down, how much exposure do they have? How much money have they loaned Ally, J.P. Morgan Chase, or Bank of America? How much do they have in loans with that bank? If they fail, then those big banks don't get that money. And if things are already tight, and this bank is like, okay, well, we're just about ready to declare bankruptcy, you won't be getting anything. Well, now there's people talking in rooms, right, Joe? There's people talking in boardrooms and offices trying to figure out, and this is happening every day. These banks probably every day, right, Joe? There's probably teams of guys, these banks, you get the small bank and they're one or two or three guys and trying to figure out, okay, how are we going to pay our loans with Bank of America? And then they get them on the phones like, okay, guess what? We're insolvent and we're going away. It's time for you to bail us out. And the big banks got to figure out what they're going to do, right?
And of course, Ally, a major lender in the auto industry. I mean, really, you think about outside of your rent, how important housing is. I don't know now, right? Because what are we? Maybe half the people in the country own a house now. I mean, it's down to such a lower number from where it used to be. But let's just take shelter. That's the most important thing. Car, credit card, right? And now, all right, we're saying 2 out of the 3 is already back to where we were. And, Jason, back to the last financial crisis. And I loved Ally's last line. Jobs is now starting to really matter. Yeah. Get ready. 800-951-0592. Patriot News Hour here on this Wednesday. Kind of a rough day. The markets are creeping closer and closer to the tipping point here as Ally Financial really started with Citigroup saying, hey, we got a problem with credit cards all of a sudden. All this big spike in credit card usage, it was for groceries and gas. People don't use credit cards for groceries and gas. That's not what it's for. I mean, some people do, right? Because you know what I'm talking about.
There's two people that use them. There's the people that just use their credit card and pay it every month, and then now what you're talking about is people are using it because they have to and they can't pay it back.
They have to. And that was big. And then, of course, Ally Financial coming out and saying it's worse than we thought and getting worse when it comes to the auto side. And then, of course, the president of J.P. Morgan, Pinto, yesterday talking about, hey, we're going to miss earnings. We got to lower expectations. Write-offs are coming. And then Jamie Dimon saying, man, we better watch out here. We're going to start cutting rates, and I don't think inflation's done, right? This is the setup here. These 1 ounce gold eagles, this is dumb, right? $25.85. It's a dumb price because we want you to take advantage of it. Here's the great part. If not, we just go back to the wholesaler. It's all good. But here's your opportunity. If you're one of those guys, I just want cheap gold at the best price. This is it. The roll of 10 ounce, it's still out there. Listen, most places, that's like $30 and $40 a coin. A coin less. There's 50 of them in a roll. I mean, we're like $1,500, $2,000 less than everybody else. $14,500 for the roll. Remember, you got to pay for it. And then they'll be here in 2 to 3 weeks. Hopefully, it'll go as fast as it can go. But that's going to be the time on that at 800-951-0592. And Jason, it's just another great opportunity.
It's a great way, but you should be stacking as much precious metals as you can, save as much as you can. The inflation numbers, I said this either earlier this week or last week, and I'll be saying this the rest of the year. 2.5 is year over year, and Joe does the month over month. These numbers are, I think, going to continue to trend down. We might even get below 2. And the Fed will be, at one of these meetings, the Fed will be waving their victory flag. This is not because inflation's gone away or that it's actually low. These companies that are firing people are going to eliminate inventory. They're going to fire sale for the Christmas season. When you drop the prices on everything, then, of course, the inflation looks like it's gone. It's not. This is what happened in the 70s.
Yeah.
Okay, and when it comes back, it's going to come back. It depends on Trump, Harris. I don't know who gets elected, but they're going to be pressured to print money. They're going to spend and spend in a mighty way. And this is going to make inflation sometime in 2025 come back. It's going to come back viciously. And then watch what happens then.
That's what Jamie Dimon's been talking about. But let me just tell you for Social Security. Let's get to this. So the core 3.2, you're going to get somewhere between 2.5 and 2.4% increase in your cost of living. That's it. Even though the core, the core's kind of the important stuff, is 3.2. Now you're already going to be poor. And of course, this is the problem. They're saying if they are admitting to 2.5 and 3.2, it's really 5 to 6. I mean, that's really the number. You're going to get 2.5. It's not going to be a very pretty picture rolling into 2025. And then we talked about this. Remember the Social Security report we talked about earlier this week? Well, guess what? The best estimate, if everything went perfect, there's no recessions, none. The government has a big increase in tax collection, okay, and doesn't spend any more money than they're spending right now. But I don't know that's ever happened. Ever. The debt in the next, between now and 2034, would be $55 trillion. Not including whatever the Fed will have on their balance sheet. Okay? So, because they've got 7, right? We don't, so 55 to 62 trillion. Now, everybody knows that's pure fiction. None of that is really going to happen. And we know it because of what I told you about Social Security and Medicare and Medicaid come 2026. There's no way around. It's not possible. We're staring down an episode where every 10 years the deficit just doubles. This has been where we're at. We're talking about probably 70 trillion. Jason, it could be as high as 100 trillion. This is what is coming. And I think most people out there, they're just in la-la land. They truly have no idea that Bank of America's, on the edge, that Ally Financial's on the edge. JP Morgan and Citigroup are saying, holy crap, all of a sudden the consumer's on the edge. And when the consumer falls, that's when you got big problems. And it's indicated in that survey for holiday spending, right? What was it? Like 90% of people said, I'm going to spend the same or less. Yeah. Merry Christmas. 800-951-0592. Final segment on this Wednesday coming up. 800-951-0592, Patriot Radio News Hour. The ridiculous pricing continues. Whatever's left on these Gold Eagles, we had 18 of them to start. They're $2,585. Gold's $2,515. I mean, it's down, $2? Right now, who knows? We'll see where it finishes. Silver, by the way, now up 20 cents. As again, banking stocks taking it on the chin today. Get yourself protected and do it in a big way. That roll of 10th ounce is still available, by the way. I just got, Brittany just gave me the sign. Still available. That roll of 10th. At $14,500 at 800-951-0592. And it's really scary when you really start to look at what's starting to happen. Because all of this is, I think, setting up for we're going to speed up the slowdown heading into Christmas. And the realities are Citigroup yesterday kind of let the cat out of the bag because there was a huge $10 billion jump in credit card spend. And then that was a July number, by the way. Citi's saying, when people buy this kind of stuff, they don't pay it off. So think about this. They were already strapped. So they had to use the credit card. Well, now they got to make a payment on the credit card. But they already don't have enough money, right, to do all the necessities. And I think this is what's happening. I think people are getting that knockout blow. Well, gosh, you know what? I needed new tires. The car broke down. I had to take it to the shop. Who knows? I needed, the water heater broke, right? The AC went down, whatever it was. Jason, they just don't got it anymore. And with default rates surging like this, and really all of the banks now saying this is the case, I would expect, I don't know, but my assumption is we're going to start seeing big increases in the unemployment rate, and that's going to be a problem.
Yeah, well, I mean, businesses are suffering the same problems as the employees, the employee, Joe. So it goes hand in hand, right? So you're going to see much more of this, much more. There's going to be, and we just keep saying this. I don't see how the rates can drop down to the 0 or 1% levels like they've done in the past to sort of bail things out, right, Joe? To make the big investors feel all happy. So if they can only get it down 1% or 1.5%, this thing is going to get really bad. And I don't know if it's going to be a slow slide and just keep on going slowly bad, Joe, or if we're going to have a big roller coaster, like you said earlier, and it's going to crash really hard. Stagflation, if Jamie Dimon's right, this could be something that's a little different. Like it might be looking for the roller coaster, and it just is slowly going downhill and never stops slowly going downhill, Joe. We could be looking at something like that. Yeah. We might be looking in the far future, looking at these times, saying the stagflation started in 2009 and never stopped. I mean, that's if you back up, you can kind of make a case for it, Joe.
800-951-0592. The Dow down almost 600 points right now. The financials once again taking it on the chin. Listen, God bless everybody. Have a great rest of your day. You know what, Jason, we're coming back. We've got a great 9/11 show coming up on this half-empty cup. Get out to Rumble. Look up half-empty cup. We got all kinds of cool videos that are coming up next.